What's up, party people? We're back. My name is Sunny Ray. I'm the host of the Sunny Ray Show. Thanks to our sponsors, Raz Rocket and GTM Ventures. Today, I'm joined by Kevin Pearl. Kevin, first of all, how are you doing today?
I'm doing great, Sunny. Thanks for having me online.
Yes, thanks for coming on. So, Kevin founded VCM Software in 1999, years before fintech even existed. So, went from a personal mission to helping his wife's VC fund to a platform trusted by leading firms globally. So, this is going to be a masterclass in building something that lasts. Kevin, I'm really pumped about this conversation. Why don't you tell us a little bit about the organization and the company you're building, just like a one or two liner, and then we'll get back to that kind of near the end of the interview. But I want people to know where we're going here with the conversation.
Sure. So we are experts at cap tables. In other words, who owns what and what does that what mean? And we today provide that as a service to venture capital organizations that have companies, have tens, hundreds of startup companies, and they need to manage their holdings, what they have, or the rights of what they have. We help them with their modeling, what might be with those companies, and also fair value, which means every quarter they have to say how much is their assets worth, and we help them with that.
Interesting. So being a company builder myself, I can see the value in that. Anyways, I don't want to go too deep into it. Let's maybe back up a little bit. So VCM software, as I mentioned, has been around since 1999. I'm trying to think
Yes.
what was hot in 1999. Was that Michael Jackson era? Are we how far back we going here? Yeah.
Something like that.
He was probably someone to celebrate. That's over a quarter century in fintech. Before fintech was even a word. Take me back to before all of that. What were you like growing up? What first got you interested in tech or business?
Sure. So I actually grew up in London. You can probably hear from the accent.
Mm-hmm.
In the family textile business. I went to London College of Fashion. That was my whole world in those days. But I was much more interested in computers than I was in fashion. In fact, I had my first computer, I think, in about 86, 85, 86, playing with what was Lotus, pre-Excel in those days, long time ago.
I remember
Um,
that.
my added value always to my business was being able to see data and being able to manipulate that data in a way that gave us some competitive advantage. Um, and I moved to Israel. I was also in the textile business, but always had a nice computer system. And then my wife actually, which was talking about that a bit, my wife was a CFO of a venture capital firm way back then, 1998. She was actually an accountant from Montreal and worked in KPMG in Israel. And she took over being responsible for reporting in this VC. And it was the early days of VC, and what to report and how those numbers work together was in Word and was in Excel, was very challenging. And I just helped her out one day, said, listen, let me help you with what's going on. And I built a system to help her with her quarterly reporting. And that system turned into VCM. Textiles moved into China and out of Europe. And I just found myself programming software for venture capital companies. That was VCM.
Do you know who invented VC? Like the idea of venture capital?
No.
uh, I'm just gonna look it up. I was gonna say I think I know who it is, but I'm not 100% sure. George Doriot is widely considered the father. I thought it was Draper's grandfather. Anyways, so I digress. So tell me. So you said you were your path to Israel. You were not born there, but yeah. So were you born there, or did you make
Born in London.
you were born in London, but then you
Born
ended
in
up moving
London.
to Israel? Interesting.
Yeah, yeah. In
And then
1989.
talk about the kind of the founding days of VCM, right? I mean, it's rare that you meet people that have been running successful businesses for this long of a duration. So I'm very curious How did it? So that sounded like it was an idea that you and your wife had what germinated across the dinner table, or
Well, I always like building systems and manipulating Excel sheets and or Lotus sheets in those days. And the very early days, I had actually written her a program which I didn't charge her for, my wife. But other people in the venture in her company wanted me to write other things, deal flow products. And at the same time, we were very young, and I was very new to the business. I didn't really know how to price anything, and I was also my other various friends would hear that I was writing software, so I would write software for other types of companies, and that was actually quite hard work in those days. It took a long time. Technology isn't where it is today, or wasn't where it is today. And but soon we realized that we actually had a product which was doing capital calls, that the back end side of VC. And as more and more companies started using that product, we realized let's focus on that. Let's build something. In those days, it was in Access, which we would install a server in our clients. And then that progressed over the years into .NET, into an online system, but really bootstrapped the whole way, using a very small, dedicated expert team as we moved along.
interesting, interesting. So people who have worked with you described you as someone who cuts through excuses and fluff and goes for long-term results rather than short-term fixes. Where did that personality come from? Was there something in your upbringing or early career that forged that mindset?
So I grew up, my mother was my mentor. She was in business. She didn't come from a business environment. So she sort of, she actually had a rich dad. She had someone who adopted her in the business world and taught her what business was all about. So there was lots of business talk at the dinner table, and entrepreneurship, again, in the textile business. So that always very excited me, interested me about how you could service somebody, how you could provide some type of added benefit to somebody, and they would be willing to pay for you for that. That was very interesting for me. And what was interesting in the textile business, there was sort of this three generations. There was this, his name was Mr. Wiener, and no relation to us. And he'd adopted my mother in the business sense. And he ran the business very differently from my mother and very differently from me. And I'd seen, he was very friendly with the store owners. And my mother was a designer. And I was about buying and selling the cloth and dealing with the factories. Same business, but very different aspects of the business. And I've a long time believed that you need to find the thing that allows you to shine in the environment that you're in.
I like that. And so, Kevin, you also founded SendHawk, which was an email billing solution for lawyers and consultants. I'm
Yes.
curious about your your entrepreneurial DNA. You touched on it a little bit there, but did you always see yourself as a founder, or did it
Always.
happen more organically?
No, I said I love entrepreneurship and running businesses.
Since the
I have a whole
beginning?
slew of businesses that didn't work, as every entrepreneur probably has. Some
Hmm.
great ideas, but you know, execution didn't work, or we couldn't make the sale, or we were the wrong time or in the wrong place. Um,
Well,
but
what would
I
you
had,
say to? Oh, sorry, Kevin. Continue.
so I mean, my main textile business in Israel that I had was probably about 10 years in one business. And then coming out of that in the mid 90s and sort of refinding myself into VCM. And then even while within VCM, trying to play with other concepts until finding something that I could really say I was became an expert at. There's always a line from Jim Rohn, if you're familiar with Jim Rohn.
I am.
And he always says, if you can imagine yourself as being an expert in your field, one of the 10 top people, what would that look like? And I was always fascinated. What would that mean? And now in our little niche, when it comes to fair value for VCs and cap tables and all of the nuances of that, I don't know if I'm one of the top 10, but we definitely have a very thorough understanding that a lot of other people don't have. And that's been very exciting moving into that place.
Do you believe in the power of visualization?
Uh, Willpower, I say, more than
Hmm.
visualization. You have to want it, but willing to be willing to work for it as well, of course. And that's a painful. painful journey. Any entrepreneur will tell you that. I'm sure you experience yourself. You have your good times and your bad times, and your bad times can be very bad, and hopefully the good times are very good.
Yeah, yeah. Hey, Kevin, talk to me about I guess like your aha moment, not just around entrepreneurship, but maybe fast forwarding more to more recent times, right? You've been a data guy, you've been the software guy. I'm sure you saw there's like a blog post type of thing that's making the rounds all over Twitter. Everybody's retweeting it today about how I forget the title of it, but something to the effect that something has fundamentally changed, and software engineers are finding themselves. I mean, in your case, you're an entrepreneur, but many people who are working at jobs, they are finding themselves between a rock and a hard place. Do you have any advice to those individuals? Is it to seek entrepreneurship? Do you think it's for everyone? Like where we're facing this major kind of crisis almost, right? Where AI is delightful and amazing. It can help you build fascinating tools and it empowers us in one way, but it also, makes a lot of people financially kind of obsolete to some extent. So I don't know, what kind of advice are you giving people around you, younger people these days?
So it's interesting. I read something the last few days about the Hitchhiker's Guide to the Galaxy, and
Mhm.
which is probably AI, right? That was the idea. You've got this machine that can think and spends thousands and millions of years building an ultimate machine to get the ultimate answer, and the answer was 42, which is very interesting. Think about that. Well, what was the question? And after all that hard work, what was the answer? And I think we need to step back sometimes and say, well, what are we trying to achieve? And are we trying to be an entrepreneur? Are we trying to be financially independent? Are we trying to eat? What do we want in our purpose in our life? And I think that stepping back and trying to make that as real as possible by offering a service to somebody. I think that's sort of the key to that. And even if you're working in an organization and thinking how much service and added value can you add to the organization? And that's what they're paying you for. They're not paying you just because you're pretty or sitting there. They're paying you because
Mm.
you give them something. And if you can, the more that you can think about what added value can I add to where I am, wherever that is, that's where your value is going to be.
What do you say to those who say entrepreneurship is risky, therefore it's not for me?
Definitely, 100%. 100%. What's interesting, I mean, we're in data for VCs. We see deal flow. We see the outputs of the deal flow, right? We see
Mhm.
those cap tables, and in the VC numbers for those people that wanted to get invested to the people that actually have successful exits, those numbers are tiny,
What are
right?
they?
So
0.1%? Not even?
well, it depends where you want to start. So within the
Hmm.
VCs themselves, typically one would say, 1 in 10 or 1 in 20 companies that are VC invested actually get to where they want them to be. And how many companies don't actually get invested in? 1 in 100, 1 in 200, 1 in 1,000.
Hmm.
So
And
statistically, I think
what are the patterns you noticed? I mean, are there patterns that have kind of come up between ones that do not just get funded, but actually become successful versus ones that kind of fall by the wayside early on?
so my late mother used to say, I told you she was my mentor in business. So she used to say business is 90% luck and 10% very good luck.
Okay. So, but what's that saying that what is it? How you kind of create your own luck, right? By making sure that you wake up every day and give it your all, and you hopefully surround yourself with the right people, perhaps focus on the right types of opportunities.
But it's hard.
But give me some
Entre-
hope. There must be something a bit more than beyond luck, no?
So there is, but it's a very hard business. The vast
Mm.
majority of people are not successful as high-tech entrepreneurs. Right? And it's maybe very romantic and have a startup and get funded. It's a hard journey. It's decades of work, and lots of downsizing. And as you said, you mentioned Centaur, right? Great idea, and made an investment, and in the end didn't go anywhere. So I always say I don't want to make things sound too rosy. It's a hard business, but all business is hard. If you have a daughter who's in medical school, right? That's hard work. That's 6 years of constant study, and then a year of stage, and another 6 years in the hospital before you're actually a doctor, and all that money and all that effort. That's hard out there. So I think maybe to frame, not to expect things to be easy, doesn't mean it isn't fun on the way. It could be great fun on the way, right? And I think really, be ready for hard work, and hope that things are going to be good, and I'm a very positive guy. I think we should be positive. Whatever gets thrown at you, just keep going, keep going. There's a chance it might be okay.
Yeah, I like that attitude. So your tagline is from complexity to confidence. So walk me through what a VC fund's life looks like before they use VCM versus after. What does that transformation actually look like in practice?
Right. So we talked a little bit about cap tables, very little bit. A cap table is there's different ways of looking at a cap table. In its simplest form, it is a log or a ledger of who owns what. So you have common shares, you have A shares, you have B shares, and how much someone paid for that. And the challenge with that is that just because you own 10% of the company, if there's an exit, it doesn't mean you're going to get 10% of the exit. You may or may not get 10%, depending on where you are in the hierarchy of shares, how much money has been invested, how big the exit was, and what the rights are for those shares. And typically, the lower the exit, you can have an exit of $100 million. And if there's been 50, 60, $70 million invested in, high chance that the entrepreneur will take out nothing or close to nothing. ESOP holders probably take out nothing. The vast majority of successful venture firms don't sell out for billions of dollars. They sell out for less than that. The shares don't mature, don't get the full value that people had dreamed they will get. And modeling that in Excel is very complicated. It's sort of non-linear regression mathematics. So you know what the ending is, and you've got all the rules. So the D shares get before the C shares, get before the B shares, get before the A shares. They get multiples, and they get interest, and their warrants, and their different types of warrants, and all that has to mesh to get you some type of way of saying the exit of, let's say, $300 million. How does that get divided up between all the rules? So the complexity is, first of all, do you know what's going on? Do you know what the rules are? Do you know what rights you've been given? And that's steeped in the documentation. One of the things that we as a company do, we read that documentation to try and extrapolate from the documents exactly what are the rights of the ABC shares. Then we have to make sure that obviously those rights go on.
No, finish up. That's right. You continue.
Okay. Then once you know who owns what, and you know what the rights are, you have to be able to put it into a platform that can then crunch that. We have an algorithm that then crunches all those numbers and gets the magical number at the end. Who, for a particular exit, who gets what and why, of course. To do that in Excel is really hard. To do that in Excel for
you have like modeling software. So is it wrong to say that you compete with Carta, or are they totally different?
So Carta, great company, slightly different from us. They're more about the vast majority of startup companies are early stage, obviously, right? Because early stage companies, very few of them actually get to late stage, right? We're more focused on later stage companies where the complexity gets much, much more difficult. We're also, Carter's more interested in 409A, which is giving a fair value to the ESOP shares. We look at it from a different angle. We're more about how much the VC is worth, which is a slightly different way of looking at it. In a technical term, if the FASB, they're at 409 and we're at 820. It's a different way of looking at the same content. but we need a slightly different output towards it. So I would say we're more specialist, more focused.
Got it. And then your solution is designed more for the VC as a user. Is that correct? Or do
Yes,
companies?
we're mostly about the VCs. But what is interesting is that we do have companies that come to us who say help. They've lost control of their cap tables, and we're happy to do that as well. It gets very complicated very quickly. A cap table gets very complicated, and
Yeah,
what that means.
and it's just such an important piece of company building that you would want as much transparency and clarity around that, what you own type of thing in the company. So that's very interesting. Yeah, sorry, you were saying something?
Yes, I mean, I would even go one stage further. I think it's maybe the most important thing about the company. Obviously, the technology is important, but you can pivot and you can change. But who owns what? That's what it's all about. You're working so hard to get an exit, to have an IPO, have your M&A, and if you don't know what you're entitled to, what you're actually working for, that's very frustrating when you finally get there and you say, well, I worked for 5 years and I walked away. There was a $75 million exit. I built all this value and I got $200,000 a year for it. That's a bit frustrating.
Interesting. Cool. So if you could go back to 1999 and give yourself one piece of advice as you were starting to build VCM, what would that be?
Be bolder.
Be bolder.
I think. Yeah, I think so.
Nice.
I think, yeah.
And how might that have played out, or what does that look like to be bolder?
I think, especially from what I came from, I think there was sort of a lack of confidence in knowing what we had was actually useful to people. I think that's maybe often people can think, well, is it really good? Are we really providing something, or is it just some type of skin over or paint job over what we're doing? And realizing that no, actually, we really do have knowledge and technology that really is useful and can really do something. I think that took a long time to realize that.
And before we bring this one to an end, Kevin, so what's the size of companies that normally come to you guys and work with you? You said they're larger ones, usually post Series B, C. Are they like 50 million plus type of thing?
More than that, usually. We deal with VCs, 500 million, $1 billion, $5 billion. Yes.
Awesome.
The larger the portfolio, the best, the more added value we have. The more difficult it is to manage that in Excel, and the more they want to know about compliance, they want to know what's real. So one thing I just must say, which you sort of want to know what my aha moment was.
Yeah.
So my aha moment for company values, which is where we are at the moment, is that really venture investing is not about today, it's about tomorrow, both for the entrepreneur and the investor. Right? So when we say a company is worth $5 million today, it's actually not worth anything today. It's a couple of people, business plan, and a few 100,000 lines of code, maybe. Maybe a pilot or two. Does that really have value? Intrinsically, probably not. But the value is maybe it might be a unicorn, maybe it might be an exit. And the way that we're thinking about venture today is it's all about optionality and all about probability. It's a slightly different way of thinking about how to value and what game we're really in. And if you're in a game that 1 in 1,000 people win, well, that's optionality, isn't it? Right? So if I win, I want to win really big. I have to, because of all the ones that I lost on the way.
That was
an aha moment for us.
Interesting. What do people not get about VC world? Like, would you come across your family members at the dinner table? Like, what's that one thing that people completely miss when it comes to VCs? Because a lot of people will say, oh, I want to not raise capital and I don't see the value in it. But there's obviously a tremendous amount of value in partnering with a VC. But I don't know, in your estimation, is there something that people tend to miss?
I think for the correct type of company, a VC is the correct vehicle. If your company has the possibility of getting really big very fast, then VC is for you. If your company is not going to have a $1 billion plus exit, then don't even go there. Right?
Yeah.
By the time you've had all that money invested, you're not going to see any return. And so the VCs sometimes get a bad rap, but understanding what business they're in the business of finding the one or two gems in their portfolio. They're going to go and going to make it big time.
Yeah.
If you're not one of those, you're going to have a really hard time. And that's
Yeah.
the game. That's the game. It's very high stakes, high reward.
Awesome, Kevin. Well, thank you. That was we're at the end of our time. This was really, really interesting, and about a topic that I thought I knew a lot about, but maybe I have more homework to do. There's a lot of nuance to this, and as companies get larger and larger, you're right, this becomes pivotal. So, thank you for your time, Kevin. If people want to learn more about you and your company, where do they go?
vcmsoftware.com. Find me in LinkedIn. Lots of blogs in LinkedIn explaining the concepts behind venture capital and the how you value companies and look at cap tables and all those nuances.
Well, it's and then my audience is mostly entrepreneurs and things like that, so tech entrepreneurs. So I'm sure people will get a lot of value out of this interview and learning more at your website. So thank you very much, everyone, for tuning in. And Kevin, maybe just hang back for 1 minute. I'll bring this stream to an end.
Sure. Thanks, Annie.
Till next time, everyone. Bye-bye.